All right. Good evening, everyone. This is Ajit Mishra from Religare Research, and welcome you all in yet another session of Week Ahead with Religare Technicals. So, those who are joining us for the first time, just to brief you about how it works. So basically, we talk about the markets, like performance for this week. At the same time, we talk about sectors which performed well, and within the Nifty 50 basket was the performance, means top 5 gainers and losers. And in the following slides, we talk about how we are seeing the key indices, Nifty and the banking index, and also a list of stocks that one should keep a close eye on. So to start with, a quick disclaimer that this webinar is meant for sharing the insight regarding the markets observation that we have around the stocks. It's not a trading or an investment recommendation. So before making any decision on the basis of the information presented, please take help from your financial advisor. Now talking about the market's performance, fourth successive week, both Nifty and the Sensex gained over 1%, and largely, it was more of consolidation phase again that we saw during the week, but it was the rise in the final session, nearly 2% kind of a gains on Friday, which helped the index to end on a positive note. Talking about the sectoral performance, you can see on the left-hand side of the table, IT, banking, metal, and realty, financial services, all these sectors contributed to the move. So metals was, last week was among the top gainers, in fact, 7% kind of gains. So that momentum continued. Banking financials, if you remember, those who have attended last time, that after 2 weeks of consolidation, we were anticipating the recovery or strength to, return, and that is what we saw in the banking and financial space. IT, with recovery in the US markets, it's witnessing decent rebound, and metals reality also ended with the decent gains. At the same time, pharma and auto, after this recent surge, witnessed a profit taking. Pharma ended with a cut of nearly 3%, while auto shed around 2%. Talking about stock specific performance, Britannia Post numbers, witness a very strong traction, and it's among the top gainer within the Nifty 50 basket on the weekly basis, roughly around 8% kind of gains. Then we have SDFC Twins. In case you track the market today, out of 300 points in the Nifty today, 170 to 180 was contributed by the SDFC and SDFC Limited, Bank and Limited. So its majority gains were contributed by these two names, and that helps the stocks to also fall into this top gainers list. Then we have Adani Enterprises and HCL Technologies from the different sectors. On the losing side, Divis Lab from the pharma space was beaten down badly post numbers. It shed nearly 13%. Then we have stocks from the cross sectors: Power Grid, Bajaj Finserv, Titan, Eicher. All these stock witness profit taking from the higher levels. Now, what to anticipate for the next week in the key indices? So first, we'll talk about Nifty. So last week we talked about 18,350. This I'll just point it out again. This was the high, close to around 18,350 is what we were eyeing, and market tested that zone finally on Friday. And what to anticipate next? So with almost gradual recovery towards the record highs, the next hurdle comes the record high zone, close to around 18,600, 700 zone. So that is what we are eyeing now. So above 18,700, 19,000 would be the next psychological hurdle. in the Nifty index. At the same time, in case if there will be any profit taking 18,100 to 17,800, that area would act as a strong support zone, in the Nifty index. But at the same time, what is important, and I'm sure those who actively trade or invest in the market, they must have observed that though the tone is positive, but the momentum is lagging in the market, that we've shared last week also, and we are seeing a similar kind of a trend. So around every critical area, be it 18,100 earlier, now it is 18,350. Markets taking its own time, to consolidate and witness a further up move. So, but at the same time, it is positive in a way that the global markets are extremely volatile, and where we are seeing sharp swings on both sides of the market. So that is not the case, at least in our market so far. So though yes, the momentum is missing, but the tone is positive, and we are inching towards the record high. That is something which is positive. But at the same time, if you see across the sector, apart from banking, you won't find any sector wherein all these stocks are aligned in a similar direction. So largely, we used to see this trend wherein, if you talk about, let's say, auto, then majority of the stocks used to trade in tandem. Means in case Eicher, Maruti, M&M, TVS are trading around the record highs. At the same time, Hero Motoko, Bajaj Auto, Tata Motors, they are struggling. So it is across the board. It's not something which is restricted to auto. Auto is in fact comparatively better, but if you go in detail in the other sector, you will find a lot of stocks underperforming the particular sector and the benchmark as well. So while we are approaching towards the record high, it's very, very important to focus on stock selection, that not all the stocks are participating, even from the large cap basket. And that's a similar kind of a trend that we are seeing on a broader front also. So the mid cap basket is doing well, comparatively well. They are trying to mirror the the benchmark index, but the small cap they are still not participating. It's still like around 20% kind of decline that we still have on small cap index from the record highs. So what the idea should be in the market like this is to please focus only on the stocks which are aligned to the market. Don't try to anticipate a change in a trend or reversal in a stock or a bounce in a stock if they are not participating in the market. So of late, yes, we had a couple of names from across sectors which did well. In case if somebody tried around 52 weeks low to buy and for a short-term gain, but majorities of these stocks are underperforming, still underperforming. The stock selection is going to be critical from here on. Next, the critical sector. Last week we talked about that after 2 weeks of consolidation, you can see these two small candles. These are weekly candles. So usually bank trades in a very broad range, but after 2 weeks of consolidation, we have finally regained strength. Banking index is finally at the record highs, and we are seeing participation across the board. So in fact, I was referring to some of these stocks from the other sector. In fact, the PSU banking pack, which were trading with the negative bias since ages, they have also witnessed a very sharp recovery. But our view remains the same, that especially when it comes to the banking pack and market like this, stick with the top performing name. The top performing names which are trading closer to their record highs or at the record highs. And for those who are attempting recovery or a rebound or a pullback of momentum in the other names, be very strict with your stop losses, because in case if there'll be any reversal in the market, and so it could be severe, and that might again result in the similar kind of move that we were seeing for last several years in those PSU names. So in the PSU basket, Bank of Baroda, Can Bank, SBI, they are the preferred names. Other than that, stick with the private banking majors. Talking about the banking index specifically, so 42,900 is what we are eyeing as the next resistance. We are at the record highs now, so there is no as such resistance. We are in uncharted territory. But as per the projection techniques, 42,900 to 44,200 is what the target areas are. And in case of profit taking, 41,600 to 40,800. So closer to around these area, we'll find banking index to take support in case if there be any correction. So the idea within the banking space is to stick with the top performing names. Yes, we have seen momentum in the PSU basket also, and stocks which were down and out since ages. But it's prudent, especially if you are trading on your own, and that how the trend unfolds, and what happens when the underperforming counters again starts witnessing pressure. So avoid those names which are just witnessing the rebound just for the sake of it, and stick with the top names instead of looking at these stocks which are recovering from the 52-week low. Now, next is stocks which should be on your radar in a market like this. The first name comes Axis Bank. Axis Bank, why Axis Bank? In fact, in the last 2-3 weeks, we are seeing a bit of profit taking in this stock. So we feel it's a buying opportunity in the market like this, wherein almost all the sectors are doing well. Some of the names from the private banking counters which were leading from the front, ICICI and Axis, both are witnessing a consolidation of profit taking at the higher levels. So the next leg, because we are already at the record highs, and in case if the banking has to go up without these private banking names, it's very difficult. So today was an exception wherein the SDFC and SDFC Limited put together healthy index to inch higher. But it's usually the case that all the private banking names, few earlier it was not SDFC Bank which is participating, Kotak, IndusInd Bank also we are witnessing mixed strength. It was Axis and ICICI largely which are helping the index to inch higher. So we feel this dip is a buying opportunity. And why we are saying this, you can see this red line. So what it indicates is that we had a very strong consolidation in the stock for almost 7-8 months. Then this decisive candle, this green candle, posts numbers, and now we are again retracing closer to that mark. So that gives us a cushion to enter those who have missed the chance earlier during the earnings up move. So this is a buying opportunity. So closer to around 820-25 is the area basically where we have strong support. So one can look at Axis Bank to accumulate from the banking space. Next stocks comes Coforge. So in fact, the IT pack today, the IT index have tested the critical resistance of the long-term moving average on the daily chart. That's the 200 days of exponential moving average. And within the IT pack, almost all the sectors, stocks contributed to the move in today's session. But if you notice that in the recent, situation wherein the IT stocks were again witnessing profit taking, some of the mid-cap IT names were holding strong. So stock like Coforge, stock like Mindtree, stock like LTI, they were holding strong. We have hardly seen any major correction in the stock prices. So if you see this weekly graph of Coforge, so after a very sharp correction from the highs, we have seen a very strong base formation around 3,300 levels. And this has the stock has formed a fresh buying pivot above the moving averages ribbon. So indications are in the favor that with recovery in the IT pack, we feel that Coforge should outperform majority of the counters. And from the mid-cap IT space, it could be one of the good bets that one can look at. So Axis and Coforge on the long side. Shorting, see, we are not recommending to go short aggressively in the market like this. It's like, going against the trend. But at the same time, there are certain stocks and sectors which are, underperforming. Last week, we talked about Chambal and Bandhan Bank. There's hardly any participation. In fact, Chambal, witnessed 6% kind of a cut. So we are still seeing certain sectors, certain pockets which are underperforming the market. So at least one should avoid, in case if you are not going short, avoid these names to go long in. That is what in the beginning of the webinar also I've said that in anticipation of any rebound, in particular beaten down, like stock from the this new age basket. Majority of the stocks are still trading around the 52-week lows. So avoid such stocks which are trading in the 52-week lows when markets are inching towards the record high. So first candidate which looks weak to us is Balakrishna from the tire space. So if you see this, the stock attempted a trend line breakout here, but couldn't sustain, followed by a very sharp decline, and it slipped below the major averages also. And now from almost like 2-3 weeks of consolidation, it has formed a fresh shorting pivot. So indications are in the favor that it should, remain range bound or inch lower towards a level of around 1750 to 1700 in weeks to come. So this stock look weak to us. Avoid any longs. You can consider short also in case the market allows. Next stock, Chambal Fertilizer. We talked about this last week also, and it is among the top underperforming stock within the FNO basket. So you can see that last week we were here, and after 2-3 days of consolidation, we have seen a very sharp downtick with rise in volumes. So that clearly indicates that this negative trend is not likely to subside anytime soon, and it might retest the previous lows around 270, 260 area. So that could be another stock which one can look at from the shorting perspective. So just to sum it up, talking about the key indices, Nifty and the banking index. Nifty, we are eyeing record highs, but at the same time, since the momentum is missing, it's very important to select your stocks appropriately. At the same time, avoid aggressive longs at the current levels, especially from the stocks which are trading at the 52-week low in anticipation of any recovery. And also avoid the broader indices, means the small cap, which is still not participating. So that is something that should be on your avoid list. So focus on largely sectors and stocks which are trading in line with the index, means they are either trading closer to their record highs or making already are at the record highs. So wherein we're going to see the traction coming in the coming weeks also. And in case if you are playing or trying to see how the momentum catch up in some of these names which are witnessing recovery from the 52-week low, maintain very strict stop losses. On the stock specific front, we talked about Axis Bank and Coforge, which looks positive to us. At the same time, Balakrishna and Chambal Fertilizer are the weak candidates. So yeah, that is all from my side on the presentation part. We'll have a quick poll followed by the Q&A session. So please quickly fill this poll so that we can start with the Q&A, and please restrict your questions to the stocks and sectors that we have discussed. Sectors, yes, we can talk a lot more in detail in case if you wish to know about any other sector also which we have covered here. We can talk about that, but no individual stock specific queries, please. Please quickly fill this feedback so that we can start with the Q&A. And in case if you are done, you can start posting your question using that Q&A tab. That Q&A button that is there on your screen, you can use that to post your questions. can start posting your questions if you're done with the feedback. All right, let's get started with Q&A session now. So Shivank Shukla have asked on the view on metal sectors. So Shivank, in fact, metal last week was the top gainer, in nearly around 7% kind of gains, and this week also it performed well. But within the metal space, in fact, as we've shared during the webinar itself, that within the sectors we are seeing stocks underperforming the pack. So here JSW Steel is leading from the front. Then we have Jindal Steel. Then we have Tata Steel also doing well. Hindalco, VDL, they are among the second rankers. And then we have stock like National Aluminum, Hind Zinc, which are still not participating. So the metal as a sector looks positive to us, but again, stock selection becomes important. So stick with the top performing names. Next question is from Mr. Rajesh Kumar, that IT sector moved roughly around 4% today. Can we expect the momentum to continue, or we have to wait for clues from the Nasdaq? So yes, this is something which is very important, which Mr. Rajesh Kumar has highlighted, that so this rebound was largely led by recovery in the Nasdaq Composite, which is a tech-heavy index of the US market. So just to give you a background about this, that the Nasdaq Composite was still, hovering around the previous swing lows, while the Dow Jones have recovered roughly around 15-70% in the last 2 weeks. And with a sharp recovery, almost 6-7% kind of a surge in the Nasdaq Composite, that triggered a rebound in our IT majors also. So we feel that it's very difficult to comment that whether these this sector has bottomed out yet. But yes, we expect this volatility to continue at least in the near future in the IT pack, and that's why we have recommended, within the sectors, prefer the top performing names. So within the IT space, the mid cap IT names, they are doing well. So we talked about Coforge, we talked about Mindtree, which looks strong to us. Then we have Persistent, which is holding strong within the mid cap IT name. So prefer with stick with the top names, and from the large cap IT counters, HCL Technologies is leading from the front, and then we have Infosys and TCS trading in tandem. So as of now, from the IT pack, mid cap IT looks best to us. Next question is from Mr. Benjamin Robert on capital goods sector. So capital goods as a sector, we are still seeing positive bias continuing. Talk about ABB, talk about Siemens, LT. All these stocks are either trading at the record highs or consolidating in a range around the record highs. So there's no change in the trend. In fact, we are very bullish on both LT and Siemens, even at the current levels. So this sector, at least in the short term, we expect the momentum to continue. Yes, of course, with some intermediate consolidation that we are seeing right now. See, no stock specific queries, please. Yes, so Mr. Mahesh have asked about the financial stocks related to the finance sectors. So within the financial basket, if you talk about the top name, Bajaj Finserv, definitely finance and Finserv, this Bajaj Twins top the lead. Other than that, now we are seeing a bit of recovery in names like L&T Finance, Shriram Transport Finance. but anything decisive, we are still not seeing that kind of a trend yet. REC, PFC, yes, they have done well, in the recent recovery. But now for fresh buying, I feel that it's too late. So one stock that should be on your radar is Bajaj Finance, because I've been observing this stock very closely. That close to around 6950 to 7000 is the area basically where it has critical support. Yesterday, it almost tested the same, and it's been hovering in a very narrow range, which is very unlikely of the Bajaj Finance kind of a counter. So, if you remember that we are seeing a similar kind of a trend in Britannia also after this, before this breakout that we have seen post numbers. So, in case if you are looking for a good bet to invest in, I feel that Bajaj Finance in days to come could provide you the opportunity. Then, and very short term perspective, in case if you're looking at something, then N&T Finance can witness decent traction from the current levels. Yeah, any questions other than this? Because we have a couple of questions on stock specific, but that won't be in the interest of the larger audience. So please stick to the question related to the sectors in case if you wish to ask anything, and anything which is related to the presentation. Yeah, this is something which is important, which Mr. Suhas have asked, sector to avoid for now. So, almost all the sectors, if you have noticed in this recent run up, have participated. In fact, the Lagarde like media also, we have seen a couple of stocks doing well from this basket. But we feel that instead of sector specific approach, stock specific approach is going to work well, because even in the underperforming sector, like pharma, if you notice that this after this recent surge, it slipped nearly 3.5% in this week. So there might be underperformance from one particular sector, but at the same time, if you see that some of the pharma names like Sun Pharma, Cipla, they are doing well. And from the mid cap basket, then we have Granules, which is holding strong and trading closer to the 52-week highs. So instead of avoiding any particular sector, avoid the underperforming stock from a particular sector, because almost all the sectors, stock from all the sectors are participating. So just to add to this example, if you talk about FMCG, let's say, so within the FMCG space, ITC is trading at the record highs. Colgate, we have seen a very strong surge of late. Britannia, made a new record high, and at the same time, HUL, we have hardly seen any participation. In fact, it's inching lower. Then we have Marico also, which is struggling, after the attempt to reclaim the previous highs. So it's not any particular sector that one should avoid. In fact, the underperforming stock from any particular sector which are not participating is something that one should avoid. Okay, next question is from Mr. Bala regarding that when can the market may witness a downtrend or a decline. So see, if we talk about on the very short term basis, then 17,800 is the area basically where we have critical support, especially in the short term for the index. Below that, the momentum that we are seeing, the positive tone that we are seeing in the market, that might subside. So it at the same time, it doesn't mean that the market is going to reverse or the bear market have started. It's just that the kind of positivity which we are seeing in the market from the last 4 weeks, that might put on hold, and the market will go under consolidation for a week or two. Okay, next is a view on sugar sector. So sugar as a sector, Mr. Benjamin, we are not seeing anything concrete here. In fact, some of the top performing names of late, like Balrampur Chini, after a breakdown, witnessed a recovery also. But other than EID Perry, if I'm not wrong, all the other stocks are either not witnessing any traction or trading very subdued. Uh, but at times when we see stories around the ethanol theme, uh, so we usually see a day of bounce or a recovery followed by a lull period. So for a time being, it's an avoid, especially in case if you're looking for short-term trading perspective. All right. So yes, we have answered all the queries. So thank you everyone for joining in, and we'll connect again, same time, same place, next Friday. Uh, Till then, take care. Thank you for joining.